Hello, everybody. So let's take a look at problem 1711. So Fernandez Corporation invested its excess cash into securities. As of December 31st, 2020, the securities portfolios consisted of the following stocks. So you've got Lindsay Jones, Poly, and Arnold Aircraft. So my cost total cost is 127,000. So in order to show the fair value adjustment, I will need an adjustment here of $4,000. And that is so that the amount I should be reporting on my balance sheet should be 123. So when I show this here of 127 less the fair value adjustment of 4,000 gives me my equity, my balance sheet at fair value. Okay, so right over here, I've got 123, which is my fair value. Now, in terms of what would be reported on the income statement, is in order to do this fair value adjustment, I'm going to have an unrealized holding gain loss income. And this here is going to be for $4,000. Okay. All right. Let's take a look at the next one here. So on December 31st, 2021, Fernandez's securities portfolio consists of the following common stocks. During the year, they sold 2,000 shares of Poly for $38,200 and purchased 2,000 more shares of Lindsay Jones and 1,000 shares of Duff Company. I guess we're now going for Simpsons references. So if you notice here, Lindsay, they had 1,000 here. They bought 2,000 more shares, and then they sold Poly. So what would be reported on their income statement? Because we're selling shares, we need to go through and report the sale of the shares. So over here, I sold 2,000 shares for $38,200. The cost of the Poly shares was $40,000. So I'm going to have a loss on sale of equity securities. And this is going to be over here of $1,800. Okay. So that's what I'm doing over here. Okay, so when it comes down over here, so that's what I basically sold these shares and I purchased 2,000 more shares of Lindsay Jones and 1,000 shares of Duff. So now when I look at my cost, right, my cost here for 2021, right, my cost here of 2021 is going to be 136. If you're wondering where they got that number, right, it would essentially be over here, 127,000. I sold 40,000 securities and I bought 2,000 more shares of Lindsay Jones for 33,000. And I bought another 1,000 shares of Duff Company. So when you see the amount of 136,000, that's where we're getting our cost from. Isn't that exciting that now you know where the numbers come from? Boy, oh boy. God, the benefits you're getting. Nothing extra. Okay. So right over here, in terms of the fair value adjustment for my equity securities for 2021, my ending balance as of 12/31/20 becomes my beginning balance of 1/1/21. So this balance now is going to be, so my equity securities at cost are 136,000. My equity securities at fair value are 94,000, right? Because that's what it's telling me right here. So the adjustment that I need in order to get from this 136 to this 94 is going to be 42,000. So my ending balance here as of 12/31/21 needs to be 42,000. So my adjustment is going to be for 38,000. And then I would have a whole unrealized holding gain loss on income for 2021 of 38,000. So that's what I would be going through and showing. So my income statement under the other income loss, I'm going to show losses from the sale of securities here, unrealized holding loss related to this. And on my balance sheet, I need to show this at $94,000. That's what I'm going to be showing on my balance sheet. This more than likely would be in the footnotes to the financial statements. Okay. So that's 2021. Okay. So now over here, what would be reported? So on December 31st, 2022, Fernandez portfolio consisted of the following common stocks. So they sold 3,000 shares of Lindsay Jones for $39.9, 500 shares of Duff Company at a loss of $2,700. Oh boy, this is gonna be fun. We're gonna get to figure out what happened here. All right, so let's take a look here. So to record the sale of Lindsay Jones, right? So we'll say over here, and we can just bring this kind of down. So my ending balance at 12/31/21 becomes my beginning balance at 1/1/22. And my beginning balance on my fair value account is going to be 1/1/22 over here at 42,000. Okay. So here I sold, first one here is I sold my shares of Lindsay Jones for 39,900. So for Lindsay Jones, I got cash of 39,900. The cost of this to me, right? So the shares cost me, Lindsay Jones, it was 15,000 plus 33,000, or for 48,000. So I'm going to have a loss on sale of securities, right? Okay, so this is going to be for 8,100, right? Sale of Lindsay Lohan, fully loaded. No, I'm just kidding. We need to be nice to Lindsay. Sale of Lindsay Jones Inc. stock. Okay. The second one we sold was we sold 500 shares of Duff Company at a loss of 2,700. So if Duff had a cost over here, so 12/31/22, loss on sale of Duff Company stock of 2,700 over here. I don't know what I sold it for, but I do know I had a loss. My shares, so my shares of Duff cost me 16,000. I sold half of them So the cost over here for the Duff Brewery shares was $8,000. That means I got $5,300 cash for them. I'm just kidding. I don't know if it's Duff Brewery. So if we look at what happened with the equity securities at cost, and this is kind of fun to do. So I've got over here 48,000 that I basically the cost of the Lindsay Lohan stock. And then I've got 8,000 the cost of the Duff Brewery. So my ending balance in terms of my cost is $80,000 at 12/31/22, which happens to be this 80,000 right over here. Now, what's interesting for this though is when it comes to my balance sheet, right? My equity securities at cost is going to be 80,000. My equity securities fair value needs to be 88,000, right? So right over here, right? So basically I need to make this happen over here, and let's see how we go through and do it. So my fair value adjustment is going to be the difference between the 88,000 and 80,000. So I'm going to need a debit balance in here so that when I add up these two amounts, I get to $88,000. So how do we go through and accomplish this? So it's going to be like magic, right? So over here, this is 8,000. So my fair value adjustment for 2022 is going to be $50,000 because the 50 minus the 42 is going to give me 8,000. So I'm going to have an unrealized holding gain of $50,000. And let's see if we went through and did that correctly. Boy, oh boy, we did. Isn't that exciting? Right? So right over here, and there we go. So that's what we would go through and do for that particular question. I want to thank all of you for joining me here this evening as I'm going crazier and crazier, but we're almost at the end. Like, look at this. Only 4 more problems to go. And then you get the whole second half of intermediate accounting. Okay, everybody, have a great rest of your day, and I look forward to seeing you on the next video. Have a great one.